Hey everyone, welcome back to Your Money, Your Life podcast, episode 271 of the pod. Make sure wherever you're listening, you like, subscribe, five-star rate, and review the podcast. We had listenership grow, viewership grow. It's kind of a crazy week, so I'm assuming that's why we saw so much growth in listener and viewership. So share with your family and friends. I'm going to give my take on the market. I'm going to give my take on what's going on. I'm going to give my take in a way that you can understand and disseminate and digest this information, I believe. So stay right with us. Um, so we can give you that information and you can share it with family and friends and have them listen in. Gather around the family room table, listen in. And we appreciate those that have done that and appreciate those that are understanding what's going on in this certain time frame, right? I think our clients are more adept than anyone to understand um, directions and how to approach it. Young investors could be giddy at these opportunities. And so I've seen that. So I do commend people that have actually like understood a little bit, as opposed to like not learning from the past. Because you definitely see people that don't learn from the past, right? And those are usually people that don't have guidance and or um, not fit to really invest. But let's jump into a little bit about. I just want to start more with like what's going on, right? Been a lot going on. So last week was, interesting for the market. It was more volatile than normal. We talked about that volatility coming back. So if you're paying attention, it was a incredible wild ride in the last week. We started off with the president dropping a big announcement, announcing new tariffs on imports that shook investors. There was a drop in the Nasdaq and S&P 500 and the Dow um, on April 3rd. It's one of the steepest declines uh, since the pandemic days. And we thought that we're going to settle, find a bottom, but then China came back swinging with a 34% tariff on US goods. That triggered a massive sell-off. The Dow dropped. You saw, the Nasdaq dropped. It was a different time. But wait, there was a plot twist. On April 9th, President Trump announced a 90-day pause on most of the tariffs except for China, which saw its rate jump to 125%. And just like that, the market snapped back. There was a huge rally, one of the biggest rallies we've seen ever. S&P 500 up almost 10%, Nasdaq up almost over 12%, and Dow climbing nearly 3,000 points. And guess what, folks? That was in one day. That's not a year time frame that I'm giving you. That was one day. And what's interesting about that, the president actually tweeted prior to this announcement, "Great time to buy," which I've never seen, right? Like, it's actually like, digest that for a moment. The president tweeted, "Great time to buy." A couple hours later, puts out an announcement that has the market go up. And back in the day, we used to call that market manipulation. There was options trading's data that showed that a lot of people bought calls on the market and other instruments that would go up during that time. There was one data that shows someone bought 1.2 million of calls of something and ended up making 33 up to the value is now 33 million, right? And so that used to be market manipulation, folks. But I guess everything goes in this time period. It's one of the biggest market rebounds that one day of yesterday, for those listening, April 10th. One of the biggest market rebounds since World War II. Yeah, that big. So what's next though? Investors are still a bit on edge. We still have a tension between the US and China, which hasn't gone away. It's going to be a standoff. It's going to be a standoff. I believe that will at some point get figured out. Both sides want and need to make a deal at some point. I think China probably a little bit more than we do needs to make a deal, but they're going to stand strong for a little bit. And I don't see us backing down. And so there's still going to be trade instability. It could mess with global growth for a bit. But for now, markets are have a little bit of breathing again. I do see now this morning, and we'll get into the chart here in a bit. Futures are down slightly, not slightly, they're down decently. But that volatility is back, and that's one of the main things. Staying, don't chase headlines. That's what we talked about. And I've actually commended the New Street Advisors community because I don't think anyone's really been chasing headlines, freaking out. It's really just been people saying, "Oh, hey, as a young person, this is a great time to buy," because I've been seeing that the last times Solano has said that, and it's always recovered. And so we'll talk about those strategies here in a second. Also, staying, like, what can you actually do as far as the increase in prices if you're a business owner in those situations? As far as your product, definitely hard. I have actually really no thought on what you could do besides thinking ahead. You could have bought an inventory earlier, I would say. As far as the regular consumer, there might be some price increases. Maybe you push out consuming of large things that you have to buy for a little bit later time frame while things kind of calm down. Those are a couple of tidbits you could use in this time frame. But other than that, there's nothing you can't control this, and you can't control the news that's going to come out. You can't control. So staying patient, not chasing headlines, not doing anything emotional is probably the best tactics during something like this. 100%. 110%. Let's dump into actual news and see what people are saying. There's a lot of opinions because, it's fun to talk about now. So there's a lot of opinions on this. Let's dive into some of them. And first and foremost, we'll react to, if we get this pulled up here. Oh, 1 second. Let's dive into our reactions in 1 second here. All right. So we're moving over to our reactions and to what's happening from a global perspective. So Goldman backtracked. Goldman had a 65% chance of recession within the next year during the reciprocal trade battle. They quickly reversed that forecast after President Trump announced a 90-day reciprocal tariff pause. So that's something we hopefully talked about. But the tariff pause. So there was a tariff pause except for China, obviously, and all the tariffs that were announced were paused 90 days except for China, which got an increase. That action had Goldman reverse their recession forecast just prior to the pause. It's economists expected a 65% chance within the next year. Following Trump's backtrack, Goldman reverted its previous expectation, GDP growth of 0.5%, and reverted to its previous expectation and a 45% chance of recession. So they went back to their previous expectations after the pause. There was a move in the bond market too that was kind of scary. It's one of the biggest intraday reversals of the bond market as well. Again, all this uncertainty and jitters is things that people are seeing in sense of like the outlook, right? The outlook is uncertain. That's why people are, that's why investors are feeling that way because they like certainty, as we talked about before. Um, it was a wild week. This update was saying it was a wild week for markets, ending with the stocks surging Wednesday. And thanks to the White House announcement of a tariff pause on most countries, with the exception of China, the European Union reciprocated President Trump's move Thursday, announcing a temporary pause of tariffs on U.S. goods for 90 days. It's some corporate leaders are still bracing for a downturn. That's another thing about this. Corporate leaders, they have to have an outlook on what's going on in the economy, in the world, in their industry, in their business. And if they're uncertain, if they're going to freeze hiring, hire less, maybe lay off if they think things are going to go negative. So that's a big part of this, not just what's going on in the market. The market's the first mover, but after that, the other effects are what is actually happening in the economy overall. And so that's something to think about as you reverse you think about this in short term. I do think in the short term this is a blip, right? I think a deal will happen at some point. I think a deal will get done, and this is going to be a short-term blip and a small noise in the breadth of someone that's investing. There's you probably already forgot about 2022, which probably felt like the longest year for investors in the most recent years. Already forgot about that. Already forgot about the pandemic drop, which is like a 30-day drop, which is super short, so easy to forget about. The 2022 correction was like a damn near full year. And do you remember it? No, because you had 2 years of incredible performance in the market. So people always feel emotionally tied to things, and we'll talk about that. Let's see what Ray Dalio, who's a legendary investor, had to say about this. He's the Bridgewater founder, a legendary hedge fund investor. He pushed President Trump to negotiate a win-win trade deal with China. So he wants a win-win trade deal with China done. This is after the White House announced a 90-day pause on reciprocal tariffs, except for 104% duties on Chinese imports. He put a LinkedIn post that said the president's move Wednesday as a step back from a worse way, adding, he hopes and expects that he will do the same with the Chinese. Earlier in the week, the head of the world's largest fund had characterized tariffs as a symptom, not the cause of a once in a lifetime breakdown, reshaping major monetary, political, and geopolitical orders. So for those of you, you can read hit here. It's a long-term LinkedIn post. Got through the highlights of it there. But I think it's interesting. I think he wants a deal. I think everyone wants a deal. I do think again it gets done, but there's going to be some of a standoff in the meantime. The background theme, of course, is now inflation, which used to be up toward team. Um, So that's a certain thing to think about here. The background theme is inflation. A key price gauge is expected to show slower growth in March as inflation continued to cool during the fourth quarter. The U.S. Consumer Price Index is forecast to have risen at an annual pace of 2.6%, down from 2.8% in February. So again, it did come in and inflation rates ease. So this was just published earlier this morning. Inflation rates eased to 2.4% in March, lower than expected. So it just came in, and the inflation rate went to 2.4%. But the tariff impacts haven't come in yet. And so we're looking backwards at March, and tariff impacts haven't hit, and inflation's going down. But will these tariff impacts harm or negatively affect inflation? That's something to think about. The consumer price index measure, a broad goods measure of goods and services across the U.S. economy, fell at a seasonally adjusted 0.1% in March, putting the 12-month inflation rate at 2.4%. And you can see this chart. It's kind of an incredible chart. Remember 2022, the height of inflation, 9% price increases. And now we've gotten it all, the price increases down to 2.8. But could inflation hamper that? We'll find out. That is the big key here. And actually, if you're seeing it, Amazon canceled orders for a wide range of products made in China and other Asian countries after the president announced a sweeping tariff agenda. Bloomberg reports. Bloomberg reported this. This for years, the e-commerce giant has purchased wholesale inventory directly from international vendors, meaning it saves on bulk shipping, but is responsible for paying levies. So they're canceling some of those bulk purchases because they have to pay the levies, obviously, to import into their warehouses, I'm assuming. Amazon and some Amazon merchants and sellers are raising prices or adding checkout fees to cover the cost of tariffs. So this is already going to start trickling down, and those effects will show in the data here in a little bit. So that's kind of interesting. It's interesting in both ways because, of course, Amazon, I mean, it affects them, but the company's still gonna make billions of dollars. But if you think about the Chinese wholesalers, um, they're definitely gonna be hit if Amazon's not buying from them, right? Like, so this is an interesting war, interesting trade battle, and we haven't looked at the chart yet, but let's look at this chart. Let's hone in on it. 5 days were flat over the past 5 days, trading days. 1 month down slightly. 6 month, of course, year to date down, but we have recovered. Look at that recovery as of yesterday. A 1 year time frame, people are still up. 5 years, incredibly up. Look at this little blip. People forgot about 2022. They would have told you the world was ending. I'm sure it seemed like it because it was a longer correction, bear market, I should say. But then 2023, 2024 made people forget. But now everyone's going to say the world's ending again, which is not true. And so that leads into, what Warren Buffett said. It was a longer interview. I encourage people to go look into it. But he said, if you're going to do dumb things, this is Warren Buffett, the legendary investor, who's actually having a good year because he makes smart moves oftentimes. Besides missing some technology or being late to technology, he makes moves and probably the best investor of our generation. But he said, if you're going to do dumb things because your stock goes down, you shouldn't own a stock at all. Some people are not actually emotionally or psychologically fit to own stocks. And he made an example in this interview with Becky Quick, pretty much saying that, pretty much saying that in this interview, that if someone came by to purchase your house for, you purchased the house for $20,000 and someone came by and said, hey, I'll give you 15,000 for it. You, of course, wouldn't give up your house. And so he's saying that assets that you believe are incredible value and will have growth in the future, because it corrects, because other people are selling, doesn't mean that you should sell, right? And if you don't grasp that, then you probably shouldn't have been, one, investing, or two, not educated enough on it or had the correct guidance, because you can look at history and see how that bodes well, how it bodes for people. There was another tweet that was brought up that someone said, if you sold when the stock goes down, why did you own it? Because it implies that you expected the stock to market to crash or go to zero, which in the first place means why would you buy stock if you expected that? Uh, in the reverse, if the stock goes down that you like, you'd be buying, right? Because the value is better for you. And it's going to increase in value in the future. And that's the fundamental thing I think people need to remember during this time is that, and again, I do commend the New Street Advisors Group community for understanding that. We've seen people that want to buy during this time. Younger investors should be, I wouldn't say giddy, but they should understand that this is good timing wise, we always say it's not timing the market, but time in the market. And this presents a good time for people, which is one of those rare opportunities. Again, because we know that there will be a recovery no matter how long it takes. It could be a few weeks, could be a few months. I don't see it longer than, half a year or so. But that's my base case is, a few couple months to a few weeks, there will be volatility, and new data will emerge. But again, I do commend this community because understanding that, because we've had emails, texts from people that want to take advantage of this, and they have done so because of us and our guidance. So that's something to think about. And again, I do commend the community. I do think there's still other people out there without guidance that are freaking out. And it's totally okay to freak out for other reasons, but as far as strictly talking market here, which is what we talk about, I wouldn't be. But for those people, they just are in this situation, you understand a little bit what their psychological thinking may be different than someone that sees and have seen this time and time again. Because those that invested for over a few years, you've actually seen a correction before, an actual bear market, not even a correction, a full on, full fledged bear market that lasted damn near a year, right? And so it literally started at the beginning of the year. Look at this chart. The peak was essentially December of 2021. And then a year of hopefully buying for people, honestly. And then we had an incredible rise. So that's how you think about it. That's how you gauge these things. We help a lot of people with it and have. That's why there's 450, 60, I should say, families on this platform, 64, 70 families on our platform. But again, share this with family and friends. For us, we have more webinars coming out. We've done a lot of them for AIGI New York, a lot of them for New York Public Library. We have more of those coming up, and also New Street Sports with draft coming up later this year, or this month, I should say. Stay tapped in. This is a good episode to talk about this. If you have any questions, feel free to reach out. We'll talk to you next week.